The last month in crypto has been extremely difficult. Many altcoins have been bleeding. There's been so many altcoin rotations, and overall price action has been really choppy. And I think a lot of market participants are succumbing to time capitulation right now. But the good news is January is behind us, and now we enter a brand new month of February, which historically has been a really good month for crypto in terms of seasonality. But will that be the case this year? In today's video, we're going to be diving into my full strategy for February, my outlook, and what you can do to save your portfolio and make sure you are correctly positioned for the next month in crypto. We're going to start with a market update. Then I'm going to get into my strategy for February. Then we're going to get into the altcoins that I'm focusing on for February using a technique to identify relative strength. And I'm also going to touch on topics such as how can you actually trade altcoins in this period? How do you invalidate altcoin positions during this period? Trading versus holding and making sure you have that split correct, and much more. So if you do enjoy content like this, make sure you are subscribed and hit that post notification bell down below for daily crypto updates. So let's get straight into the videos, beginning with the market update. Bitcoin actually closed above 100K for the first time ever in terms of a monthly close. So obviously a lot of alts are bleeding right now, but Bitcoin itself is still looking relatively strong. It has started to show on the lower time frame some signs of rolling over, but from a structural perspective on the daily and the weekly, I'm showing the daily chart in front of you right now. It still does have bullish structure intact. And Doc posted a very good chart here. He's basically just outlined the ranges currently for Bitcoin. Above the 100K zone, that's a must hold level. Above that, we really have nothing to worry about. If Bitcoin breaks down from that zone, we're back into the prior range that we've been in since the beginning of November, which is between 90K and 100K. That is essentially a do nothing zone. So probably not a zone to go really risk on and crazily add to positions, but it's a zone to kind of monitor and see where Bitcoin goes. And then Doc has his zone below, which is in the 80K zone, and this is his bullish zone. This also lines up with the bull market band, so this could potentially be a zone to size up and bid a little bit heavier with invalidation. So I like Doc's framework here, splitting Bitcoin up into a bullish, do nothing, and a must hold zone. Doc's obviously one of our high time frame analysts in the Mars High Club Discord, and he posts chart updates, setups, and does his weekly live tutorial with members, which is absolutely great. It's always good to have cool heads who are very focused on the trading and TA side in the Discord, and he's been doing a great job. We can see that Bitcoin is seasonally a strong performer in February. So is Ethereum. Altcoins typically do outperform from that period from January to May in the post-halving years, which we are currently in. In yesterday's video, I spoke about why this time is a little bit different, so you have to take seasonality with a grain of salt. I'm not going to bang the same drum today. I mostly want to focus today on positioning and some more practical looks at the market, going through some charts that I think are super relevant. But if you do want a bit more of a broader take on the current state and the health of the altcoin market and the reasons why it's a little bit different to the last cycle, go and watch yesterday's video where I cover that in a much more in-depth video. If you want to look at the historic data, this should be a good period for crypto, Bitcoin, and altcoins. But I think a really good way to go about the market right now, given some of the uncertainty, is just to play it level by level. Look at your charts, be very technical about the market, and look at price action instead of asking yourself, are we in a bull market? Are we in a bear market? Are we bullish? Are we bearish? I don't think that's the right question. The better question to ask yourself is, if we hit certain levels, if this happens, what do I do? And that logic can also be applied not just to Bitcoin and the overall chart, but also individual altcoins. If it goes to this price, what am I doing? How much am I selling? If it breaks down to this price, or if it hits this level, am I invalidating some of my position? What am I doing? I think that's a better way to look at the market, because I think a lot of market participants try and basically define their strategy around either market being bullish or market being bearish. But I think a much better way to go about it is approaching the market in the conditional form, meaning if something happens, then I do this, then I take an action. And also, which we'll discuss later in today's video, viewing the market not as either a crazy big alt season or a crazy bear market, looking at it with nuance and accepting that, all right, there are going to be narratives within the market that actually perform really well. We're going to speak about some of them later in today's video, that even if Bitcoin went sideways, there can be pockets of outperformance amongst these sectors. We know, as I discussed yesterday, it's becoming a very rotationary, attention-driven market. There still is a lot of money to be made looking at where the attention is flowing and capitalizing on those trends that don't require you to rely on this big altcoin season. So I think just changing that heuristic in your head from up only and relying on that to looking at the market in terms of pockets and periods of outperformance amongst certain sectors, I think you'll be a lot better off taking that heuristic into the next part of the bull market and February. And later in today's video, I'm going to give you a practical way to actually go about applying that to your own portfolio. Now, over the last 24 hours, we've seen a lot of headlines coming out. One of these is that Trump wants to implement tariffs on Mexico, Canada, and China. And this has obviously caused a little bit of a downside market reaction on equities and also crypto, because he said that he's not concerned about market reaction and accepted that it could cause short-term disruption. So this spooked the market a little bit overnight. However, I do want to make a point here, which I think is really important. I feel like a lot of people are getting sucked up in the headlines. A few weeks ago, we had Trump. Then last week, we had DeepSeek. Then we had FOMC. We had, I don't know if you guys remember, back in August last year, the yen carry trade, which was a headline that freaked everyone out, which actually ended up marking a local bottom. And pretty much every single day, there are new headlines coming out. Bullish, bearish. The thing is, and the main thing you got to remember is that markets are forward-looking. They're taking information in real time, and they're pricing in the probabilities of future outcomes based on that information. So if you are always reacting to news, you aren't preemptively pricing in a future outcome. You are reacting to the fact that that outcome is already priced in. And this is a big mistake in the market because it can force you to become over-emotional and capitulate positions that you shouldn't be capitulating, and maybe even going too risk-on when you shouldn't be going risk-on. So I think relying a lot less on headlines and letting headlines affect your strategy is a good approach to have to the market. Price action often also tells you a lot about what you need to know without actually having to rely on headlines. And I know Jason Pizzino is a big proponent of this. He doesn't even look at the news. He doesn't look at the headlines because he has the theory that the headlines actually mark local bottoms and mark local tops. So really bearish headlines tend to come out at the bottom. Really bullish headlines tend to come out at the tops. So if you're relying on these headlines to trade, you're just going to end up screwing yourself and probably do the opposite of what you should be doing. So the main point I want to make right now is just block out the noise. Stick to your strategy. We'll talk about my strategy for February later in today's video. Don't look at the headlines. Don't get bullish or bearish every single day and flip-flop just based on the market sentiment. That is a really bad way to go about things. Also, you shouldn't be getting too emotional based on price alone. You should always have a system for each trade that you take, each altcoin that you hold that, as I said, plays into this conditional theory of if and then. So you should already know what you're going to do with the position at certain price levels. If you buy into a coin at 100, you should already have a plan. If it drops below its $70 major high time frame support level, you might cut 50% at that support level. We'll talk about invalidations later at the show. Conversely, if that coin goes up 50% to $150, you might have a plan to take 50%. So all this should be laid out before you open a trade, so the headlines don't actually matter. You already have your full plan outlined before you open a trade. But unfortunately, I think a lot of people in the market don't do that, and they trade purely based on a whim. They open positions based on emotion. They close positions based on emotion. Emotion shouldn't dictate the opening and closing of positions. Analysis, and that can be paired with fundamentals and technicals, should determine a trade plan. And I honestly think the number one skill that you need in crypto is emotional regulation. I think emotional regulation is probably more important than technical skills. There are great on-chain hunters, and there are people that are really good at looking at analytics and people that are really good at analyzing charts. But the best traders that I've seen are the ones that just have really solid risk management systems. Paradise Doc, our analysts in the Discord, one thing that I really like about them are their risk management systems. They might not have the fanciest indicators. Paradise actually operates on quite a simple system, but the reason why it's effective is because risk management is at the forefront. He has very, very clear take profit and invalidation plans. That sometimes means he cuts positions too early and takes profits too early, but he doesn't expose himself to huge downside. Generally speaking, in the market, you should let your winners ride, take profits on them, but let the large amount of that position ride, and then you should be cutting your losers really quick. So you should be trying to protect capital quickly and make money slowly. Let your winners ride, cut your losers quick. I think that's really good advice for the average person trying to manage a portfolio or manage a position in the market. Now, as you can see in front of you, there are some bullish things for Bitcoin mid to long term. One of those things is the M2 money supply, which is increasing. We know how responsive as an asset Bitcoin is to global liquidity. So there are still things that are positive in the macro backdrop for Bitcoin. Obviously, it's getting a huge passive ETF bid, which is fueling price action. Trump's obviously in office. This is a huge catalyst for crypto, in my opinion, longer term. The regulatory landscape under Trump is a lot more positive. There are some huge bullish tailwinds for crypto. I just think it's important to remind yourself of that before letting yourself get too disconnected just based on short-term altcoin price action. I guess my basic observation as to why people are a bit disconnected from the bullish tailwinds is because I think most people don't really hold much Bitcoin compared to altcoins or even maybe Solana, and most people are in much riskier assets, and those have obviously been much more effective than Bitcoin, which is still held up relatively well. So I totally get it. I'm not one of these like naive people that goes on the show and I'm like, you know what, I don't understand. Bitcoin's at 102K and everyone's bearish. It doesn't make sense. It's like, well, it makes complete sense. Most people are in altcoins. So that's why there's this disconnect between the fear and greed on Bitcoin, for example. I'm sure if you had the fear and greed on altcoins, it would be much worse in comparison. I actually want to get up a tweet. It's not even released yet, but it's on my scheduled tweets that I posted about altcoin season because I'm getting a lot of questions about that. I kind of talk about when or if I think we're getting altcoin season more in the last video, but an interesting chart that I got to add on to that video yesterday and the points that I made was this, and this is basically the altcoin season index. What's interesting is that an altcoin season, by the way, is just defined as a period of altcoin outperformance sustained against Bitcoin. We were in that period in November for about a week and a half, and we've kind of been oscillating between the green period, which is Bitcoin season, and the red period, which is altcoin season. So even though we're in that period, we have retraced, and right now we're just chopping around the 50% range. So actually, right now, it's not a Bitcoin season, and it's not an altcoin season. We're just chopping in the middle. And I think this chop has led a lot of people to capitulate because I think there was this expectation when we ticked into this altcoin season territory that it would sustain like it did back in 2021. But you have to remember, it's a very common thing, especially in halving years, for alt season to be temporary before a bigger one later on. If there's any hopium I'll give you, it actually happened in 2020. We wicked in a couple of times and then we didn't have the big one until 2021. So there is a chance that we go there and we maintain there again. Now, hopefully some of the strategies I'll implement and I'll show you in today's video will mean that you're not relying on an extended alt season to actually make money. And the reality is there's heaps of opportunities to make money in crypto, even if we aren't in that zone. But for the people that are relying on that zone, I will say that I expect at some point we're going to go back there again. I don't think that is the only time we're going to go into this red zone for altcoins this entire cycle. Now, obviously, when that happens, you're going to need to make sure you have the right strategy and you're in the right altcoins to capitalize on that. But I don't think it's just over just yet. It's just a choppy period in the market, and a lot of that has been driven by macro. So let's dive a little bit deeper into that and talk about the state of the market right now. Then let's get into my strategy for February, my plan, my altcoins, etc. Just looking at a quick overview of the market on bubbles. You can see a lot of stuff is obviously down over the past week. There are a few outliers. Some of the RWA coins, we'll speak about them later. Hyperliquid, Move, Tau. A lot of the coins that are green, I would actually expect to be green. These are the coins with the strongest narratives. And the coins that are weak, I actually kind of expect to be weak. So there's kind of a similarity here between the really, really green coins right now which are mostly DeFi, utility, RWA plays, which is really aligned with the current narrative, and the red coins right now, which a lot of them are meme coins, which haven't been performing for a couple of months now. And these are the coins that are selling off more. Layer 2s also aren't performing that well. Trump's had a massive cool off. Some of the AI projects have had a big cool off. We'll speak about them later today and what my plan is with the AI projects. But it's no surprise to see the utility stuff actually holding up in this environment due to the current narrative. We're going to look at that later in today's video. Yesterday, Ethereum was green for a little bit, but it ended up retracing and faking everyone out. I did a funny tweet here. Don't get my hopes up again, ETH. You've broken my heart too many times. And last night, it pumped and it faked out again and it broke my heart again. It actually pumped above this resistance level and then ended up coming back down, and now it's broken back below the money noodle on the hour again. So now it's looking like it wants to go even lower, which I don't know why Ethereum keeps doing this. It keeps faking us out. I guess it's low volume at the moment, low market interest, so there isn't like a huge tailwind or catalyst to actually have volume coming into ETH either. Just like Bitcoin, February is usually a pretty positive month for Ethereum. You can see here that the last post-halving year, we had a 7.3% gain for Ethereum in Feb, and actually 8 of the past 9 Februaries have been bullish for ETH. So seasonally, its best month, but obviously just really weak right now in terms of its narrative. But interestingly, despite it looking weak, Patoshi points out that on ETH BTC, this is the level that it does need to bounce on. It's probably the highest probability long level to react on ETH BTC. But I'm kind of a little bit skeptical just because of the amount of fake outs we've gotten now. I would love an Ethereum pump. It would make my day. It might even make my month, because an Ethereum pump would be very good for the effect on chain, especially in the ETH ecosystem. I think it would drive a bit of a wealth effect into other alts on ETH. So that would potentially trigger an on-chain meta, and there'll be lots of opportunities to make money there. And if you're holding coins on ETH, a lot of them will reprice just off the back of ETH rallying, but ETH hasn't rallied yet. So that whole effect can't come into play until Ethereum rallies. So we're reliant on other catalysts to pump the market. Similarly to the effect that the Sol ecosystem has had when Sol massively pumped, and then we saw a wealth effect into lots of other alts on Solana. Looking through the current narratives in the market, pretty much every altcoin is sold off, from DePIN, which has been the most resilient but still down, all the way down to meme coins, DEXs, DeFi's had a sell-off, everything's had a sell-off, and also DeFi AI and AI agents are down a lot on the month. But if you do zoom out to the 90-day, agents and DeFi AI are still some of the strongest performing narratives. So time frame's very important here, because it does make sense if agents pumped the most from November to January, that when the market turns, there's more fluff there. I'm actually posting this chart on my Twitter. You can see when it comes to new bubbles, what often happens is you see like a quick run up because everyone gets really excited. Oh, agents are the future. Then you see a sell-off where people start to say, oh, it's all over. But if the narrative has staying power, and if the tech has staying power, over time, the good projects rise to the top, the bad stuff gets flushed out, and eventually you have this resurgence happening over time. So I think it's totally normal that when a sector grows so quickly like AI agents, because a lot of it was very speculative, when liquidity goes out, just like it goes in very quickly and pumps prices massively, when it comes out, it has an equally reflexive effect to the downside that causes a big sell-off or the bubble popping. That's what we're seeing now, that temporary bubble on a lot of these alts popping. And then the good projects, the really quality ones that are building good technologies at reasonable valuations, will start to climb back up and longer term be quite good plays. So my long-term thesis on agents and AI hasn't changed. I think it's actually one of the most transformative use cases for crypto that hasn't fully been tapped into, probably alongside RWA and gaming. Just in the short term, it's experiencing a sell-off after a big, massive run-up. And this period here, this it's over period, is actually where longer term a lot of the big opportunities lie. And then the next component aside from that is obviously picking the right assets, which admittedly in AI is hard because of how rotationary it is. However, I think over time, a few of the front runners and a few of the market leaders will start to establish themselves. There's already a few bets that have taken their longer term, but over time, this does become a bit more clearer. And that's why I think for AI agents, it's a very good sector to trade. That's something I've also spoken a lot about because there's lots of opportunities there, and we know that it's such a strong narrative. So when that bubble comes back, and it will, even temporarily, there's lots of trading opportunities within that to make money. So it's definitely, I personally think AI and AI agents, if you want to spend some time learning on-chain trading, if you want to get in the trenches, it's probably the highest EV sector to research. Meme coins aren't really the meta anymore, although you can still make a lot of money on new memes, because memes are always going to be around and there's always going to be something that's pumping on chain. But it's the AI agents specifically, which I think are a higher upside play in terms of spending your time on chain, just because of, I think, the eventual market-wide saturation that we are going to see in terms of the narrative, just because of how transformative it is in people's daily lives. So that's a bit of a market update for you. Now let's get into my strategy for February. The first thing that I think you have to be right now is cognizant of whether you're risk on or risk off. So as Zahir points out, crypto has two conditions: lights on or lights off. Lights off means no new money. This is the current period that we're in. Liquidity tapers off. Games are purely PvP and only rotations of capital. This game always has opportunities to make money, but this game is a lot harder to play versus phase 2, which we had in November and a bit of December, which is lights on. This is when new money's coming in, liquidity comes back, and there's fresh speculation and new regimes in terms of market structure. Now, the reality is, most of the time, we're in lights off mode. The majority of the time, percentage-wise, is spent in phase 1. The lights on, new money in mode happens a lot less, but when it does happen, you can make a lot of money. So you really want to during the lights on mode periods, you want to make a lot of money. You want to be playing the on-chain games, making 5, 10x's, securing your portfolio. And I think at some point it's going to happen again this cycle. I can't tell you exactly when it is. It could be Feb, it could be March, it could be April. At some point, lights on will come back. You'll have a window. It might not be big, but a window to make big gains. And then during lights off mode, your number one goal is to preserve capital. So right now we're in lights off mode, which means you have to be preserving your capital. So it's better right now to not be forcing trades. And if you have to wait for the next opportunity, just wait for the next high conviction opportunity. Don't force trades. I got asked by someone in my Discord earlier today, Mars, I've got $20,000 and I want to deploy it into the market. What should I do? And I just said to them, like, honestly, just chill. Wait for an opportunity. When the stars align, you've got liquidity. Something's always going to come around. And when that happens, then you can bet on that opportunity. Instead of kind of shooting your shot now, speculatively hoping and praying that the tokens you buy perform really well. I think it's much better off waiting for the stars to align on a thesis that you really have conviction in. Because if you don't have conviction in a coin, I've said this many times, then you're not going to have the mental fortitude to hold it through times of volatility. You need to have conviction in a coin in order to hold it through chop and difficult periods in the market. And if you don't, then okay, you can get into a rotation, but then you're looking at more of a trade where you'll have more technical invalidation. So I think right now, if you don't have an edge, don't try and force it. As Runner XBT points out, people in general make most of their money in trending conditions, aka lights on mode, and lose it during the chop, aka lights off mode. So you have to make sure that during lights off, you're preserving capital, and lights on, you are making hay while the sun shines. And right now, I'm being a little bit more defensive with my capital, not forcing trades. I'll show you a couple setups, what's a good setup right now, what's a bad setup right now later in the video, because if you try and force trades right now, you can end up burning a lot of capital, actually catching knives on the way down. And when lights on mode is on, I think the number one lesson probably a lot of you learned is you got to take a lot of profits and not be complacent with that. Even I was a bit more complacent than I would have liked to have been in Q4, even though I made good money. And it seems to feel like whenever the market pumps, you can never take enough profits. But it's always a good lesson that when you get lights on mode, you need to be taking a lot of profits because you need to prepare for lights off mode. If you, I think, view the market in this very basic framework of two modes with the nuance of trying to make money in trending conditions and trying to protect it during chop, I think you'll do a lot better in the market. For most coins right now, in terms of new positions, there are only two scenarios where I'll buy a coin. One, if it's exhibiting a show of strength, so it's in a new uptrend, it's making higher lows, and it's now reclaiming levels that it broke down. That's scenario A, that I would buy a coin. Scenario B, that I would buy a coin, is a big flush, a liquidation cascade, a massive wick to the downside, because capitulation on good quality fundamental alts is where you get the most opportunity. You don't get that much opportunity in slow bleed. A lot of altcoins are just exhibiting slow bleed right now. The other thing you need to do right now is be very clear on your holding versus trading split. Now, as I discussed in yesterday's video, recently I've moved, because we're now in lights off mode temporarily, to a 50-50 split in terms of holding versus trading. Now, before I was roughly 70-30, but as the cycle progresses, as we get more into the cycle and it matures, you need to adapt your strategy over time. And if I'm holding 80% of my portfolio in altcoins into March, April, May, June, July, I'm putting too much pressure on myself to try and time the top. I don't want to do that. So my strategy in the market has always been, and I spoke about this in videos in November and December, early December as well, that as the cycle goes on, I want to progressively take stables out of long-term holdings into either shorter-term positions with invalidation or stables, which I then use to deploy and take advantage of trading opportunities based on technicals. And I'll show you a very simple strategy for this in a couple of minutes. So I think you just need to work out, because everyone's different, how much time you have, what your skill sets are, and how you want to approach the market heading into this next period of the market. If you don't have a lot of time, you've got a job, and you really can't be bothered with keeping up to date with all these rotations, that's fine. Just pick a few coins that you align with, that you have high conviction in, that are from really strong narratives, 5 to 10 coins, and pay attention to the technicals on those coins. Invalidate if they break down from major high time frame levels. Add more if you get a big flush out or a really nice strength reclaim like I just discussed, and on all those new positions you can have invalidation, and you can just actively manage a portfolio of 5 to 10 coins. And maybe 5 of them you don't even touch, and then the 5 that you have less conviction in, you actively manage a little bit more. And then you don't actively really trade, you're just managing positions. That is, I think, an easier way to approach the market if you don't have a lot of time, because on TradingView you can just set alerts, you'll get pinged when a major level hits. It's not every day that you're crossing the 200 MA to the downside on an alt on the weekly chart. In fact, it's only really going to be a few times a month where you're actively managing if you're not holding a lot of coins. Now, if you're more like me and you spend a lot of time in the market, like 12 hours a day, 8 hours a day, even like a few hours a day, and you're in the trenches a bit more, you're a bit more of an on-chain expert, then you can afford to go closer to what I am, which is more 50-50 in terms of, okay, you have that 50% portfolio of assets that you're holding longer term. Yes, you might have some technical invalidations for them, but the other 50% you're using to take advantage of opportunities. So at times you might be really heavy in some coins, then you might go out. If either A, you make a lot of profits on those trades, or B, they start to break down, you might sit in stables for a little bit, and then you might redeploy based on the next opportunity. Now, for me, I haven't seen that many opportunities over the last couple of weeks to significantly redeploy a lot of my stablecoin balance. However, there are a few plays that I've taken. I'll show you later in today's video, 1 or 2 of them. And if there is a big opportunity that comes across my desk that I really like, and this happens periodically, probably every couple of weeks or every month, then I actually have the liquidity to get into that opportunity. So I think this market is about being really cognizant of where the market environment is. If the environment isn't conducive to your trading style, don't try and force it. Don't force trades based on a style that doesn't work in a certain type of market. And that's an adjustment that I've had to make over the last few weeks, because in November, I was doing really well on some of my AI coins. Like a lot of them were going up 5 to 10x and doing massive multiples because the market really aligned with my trading style. My fundamental now, combined with the price action, the trending price action that we were seeing, made identifying these breakouts really easy. This isn't a market where I can trade like that. This isn't a market where I can just get into an AI coin and make huge multiples. So I've also had to adapt that when I enter some of these new coins, I have to be a lot stricter with my invalidation, be a bit more of a technical trader, and also be very selective about the sectors that I'm entering based on how hot they are in terms of mindshare and relative strength. So The reality is markets adapt over time, and if you're not adapting to the current environment, then you're probably not going to do very well in crypto. Just like the people from 2021, if they didn't adapt this cycle, they're probably not going to do very well. So you need to keep adapting as time goes on, taking new information into account and tweaking your strategy. And I do see some comments sometimes like, oh, Miles, that just means you're flip-flopping. That's not flip-flopping at all. The best traders in the world are actively taking new information into account. There's a difference between adapting your strategy and being stubborn. I would rather adapt my strategy than be stubborn and end up losing money as a result of my stubbornness. There are a lot of moon boys as well on YouTube that are going to tell you, oh no, everything's the same. There's always an alt season. Everything will go up. Just wait. You'd love to hear that. You'd probably love me if I came onto these videos and said that all the time. But in my opinion, it's not practical, and it's actually going to end up losing you more money than if you learn some of the principles that I teach in these shows and implement them into your system. Let's talk about a couple of the principles in more depth now. I think whenever you enter any coin, there's 3 things you have to keep in mind in order to make sure you are properly managing your emotions. Number 1, as I mentioned before, you need to build real conviction in a thesis if it's a long-term play. So if you don't have real conviction in that thesis, you're going to end up questioning it. Like, I'm sure a lot of you are holding some altcoins that you're like, oh, should I cut now? Should I cut my losses? And the reason you're thinking about that is because you never actually built real conviction in that position in the first place. And this is okay. I've done it many times. And even this cycle has been a couple coins I've held, even though I'm not that bullish on them anymore. I'm just still holding them because I've been a little bit complacent. But you see the issue there, right? If you didn't build that conviction up front, it's going to be very hard to hold that altcoin. Now, if it's not a long-term play, the same logic applies to a short-term play. You need conviction in the technical setup that you're entering. So knowing exactly why you're entering based on your system and having setups for that system that allow you to take profits or have a stop loss. Point number 2, always have a technical validation and invalidation for a trade. Now, there are very few altcoins where you won't enter without an invalidation. So, as I mentioned, in November, you could get away with just longing coins and not really paying attention to technicals because it was that lights on market where everything's just going up. Now, because it's more of a lights off / choppy PvP market, you have to be a lot stricter. There's still money, there's still rotations happening, but if you don't have strict parameters, you can bleed positions really, really quickly. So what I recommend is every time you enter a coin, you have a technical invalidation. They're usually based on 2 things. 1, the high time frame levels on that coin. So structure, has it made a lower low? Is it holding a high time frame level? And 2, the moving averages. There's one that I really like. It's the money noodle. It's a custom indicator in the Mars High Club. It's basically a combination of moving averages that has efficacy on the higher time frames. These are 2 very simple things you can use, demand zones and moving averages, in order to have an invalidation. So you could say, okay, if we break down from the money noodle and close below for 2 consecutive days on the daily, because Virtual Protocol has respected the daily money noodle, then I'm going to invalidate 50%. Bang, you invalidate 50%. And if it breaks down and makes a lower low on its major horizontal level, so if it breaks this level and closes below on the daily for 2 consecutive days, then I'm going to cut my other 50%. And then I'm happy to get in if it starts to reclaim again. I'll get in 25% on the break, 25% on the retest, 25% on the reclaim of this, and then 25% on the break of its all-time high, something like that. That's just a rough framework for you, but you would, before buying a position, before buying virtuals, you would already have that mapped out on a spreadsheet, written down however you want to take notes. That plan is already there. Your technical validation and invalidation. What's a validation? On the flip side, a validation is a buy level. So instead of buying a token at a random level, let me try and find one at the moment that's at a random level. Let's use Bitcoin as an example. The levels for Bitcoin are 100K, that's a big psychological level, and then you've got your range low at 90K, and then you've got your high time frame moving averages on the weekly and monthly. So there's like 3 bid zones. I wouldn't really want to enter here at 102. It's in no man's land. It's making lower lows. It hasn't like flushed liquidity to the downside. So for me, it doesn't make much sense to enter Bitcoin at these levels. So that is where validation comes in. Validation should also apply just like invalidation applies. Now, I think, honestly, the biggest mistake I've seen in my Discord, on YouTube, on Twitter, is people don't have invalidations for trades. Coins are broken down and given them very clear technical signs of weakness again and again and again and again, and they don't invalidate, and they just ride them to zero. It's actually better to cut your losses on coins and then having to rebuy a little bit higher if the narrative comes back and it starts showing strength than constantly holding on to coins that are bleeding to zero. The reason why I'm recommending at this stage in the cycle, and I've always said this, but especially now, that you have invalidation is because conviction is subjective, and in this market, conviction is fleeting, but technicals are black and white. So you can't lie to yourself when you've said, okay, if this breaks down on this level, I'm going to invalidate. You can't lie to yourself when it's at that level, because once it's at that level, it's already hit that point. Whereas you can lie to yourself and FUD conviction. You can say, oh, well, I still have conviction. Actually, I still believe in it. And then one day you feel like, oh, no, I don't believe in it. Like, conviction is not a very good metric to go by. Have some black and white things that hold you accountable to yourself. And then number 3, manage position sizing in accordance with the risk of a coin. It's very important that for riskier coins, you go in with less size, and with higher conviction coins, you can allow yourself to go in with higher size, as long as it's not like something stupid, like 20% of your portfolio. I have a rule that coins don't represent more than 5% of my portfolio in general. There are a few exceptions where I'll let something ride, let your winners ride, cut your losers fast, that's saying, and it might end up becoming 10, 15, 20% of my portfolio, but my initial position won't be anything more than 5% generally into that coin, unless it's a shorter term trade and I have a clearly defined amount that I want to lose. So I think it's very important to position size correctly, because another mistake I see people making is they go all in on a risky coin, it goes to zero, then your whole portfolio is wrecked. Whereas you could have prevented that by going in with a reasonable size versus its risk. So let's say 5%, then you're only ever limited to 5% downside. Now I want to go through 2 charts, the virtuals chart and the AI16Z chart, because they're AI coins that I think are relevant when talking about structure. I already mentioned how I'll look at the moving average and the horizontal demand zones for market structure, but I want to keep it very basic. This is still intact, right? Virtuals is still intact, and I'm actually bidding virtuals at this level. Now, the reason why it's still intact is because technically it's this zone here, 176, that it needs to break down to make a lower low. Now, on the daily, it may break down, but what we often see on coins is they'll come down, they'll deviate, and then they'll reclaim. So for me, if it starts to break, that's not invalidated. Invalidated is a close below or a bearish retest like this. That is invalidation. In my opinion, that's a good place to de-risk on that balance. However, and obviously you'll move down the lower time frames, 4 hourly, 1 hourly, to actually execute on an invalidation. Your daily and your weekly are for flagging the fact that it could be invalidating, right? You want to start on the higher time frames, you want to go down and execute on the lower time frames. But this isn't actually a breakdown because there's no lower low. So unless we break this lower low, it's technically still intact. Let me show you a coin that's not intact, that I was forced to cut because I was in a trade here and I had to cut it based on 2 things that it broke. A, the moving average, and B, it broke down from its low and it made a lower low, and this is AI16Z. So you can see the low was here, just like the low for virtuals is here. It hasn't broken yet, as you can see. Whereas the AI16Z low did break here for 6 days. This is actually the 2-day chart. If I go into the daily, it becomes even more obvious. And you had chances, right, to de-risk on this final breakdown. So if you actually bought the low, because I bought pretty close to the bottom on this first wick, as it started to reclaim, you can see that you had 2 days where you've had price action wicking back up. This is a bearish retest. So as I said, oftentimes things just don't shoot through and break down. They'll come down, then they'll come up and capture liquidity to the upside, and then you have an opportunity to de-risk here before the next breakdown. And then you might say, oh, but Mars, what if it just reclaims? Well, it's fine. You can cut it here, and then if it does this and then ends up reclaiming, you just get in on a show of strength. You have your first opportunity on the reclaim, then you have a reclaim of the moving average. That's your second opportunity to get in, and then your third opportunity might be the next pullback as long as structure's intact on the lower time frame. So having these basic technical momentum indicators, I think, are very important in order to make sure that you're actually holding positions that are intact. By the way, you can ask me anytime in the Discord about a position. over the last few weeks, I've been answering pretty much every single question in my Questions for Mars channel. I get questions all the time. What do you think about this coin? Are you still holding this coin? I do change my positioning based on invalidation. Like AI16Z, for example, a few weeks ago, I said I was in a long because it was structurally intact. I was forced to cut because it started to break down. I can show you these charts on the YouTube shows, but for more live updates, the Discord is the place to be because I'm giving live voice message responses to anyone that asks a question about any altcoin. And that can actually help when it comes to learning these systems and putting them into practice yourself. We also have our analysts like Paradise who have multiple tutorials per week where we actually go through these systems. He also has a resources and education section which teaches all of this stuff, how to actually invalidate, risk manage, and you can ask him any question. You can see he answers a bunch of questions in his channel which pertain to the technical stuff. And also we have a trading channel. So if you are a trader and have a trading focus, I'll show it to you right now. It's called Trading Talk. You can basically just post charts and help each other trade. And we don't just have analysts, we have a bunch of apprentices who have studied Paradises and Doc styles, and they teach on their behalf now. So we have these systems that people can use. So I recommend paying attention to this channel if you are actively managing positions, because you will then see when things are breaking down and you'll make sure you never just lose money for nothing, right? So if you are more serious in this next stage of the cycle, as I think anyone investing their own money in crypto should be, there's a link in the description down below to the Discord. I know a lot of you are already utilizing that, are already in there, a lot of the resources that we have at our disposal. And if you're watching this and you're in the Mars High Club, I highly recommend, if you're only paying attention to my channels, that's fine, but also branch out a bit and start to learn some of the concepts that these other traders are teaching. I've gotten them in there for a reason, and that's because they are amazing traders that have amazing things to teach and actually make you a better trader, especially at this stage in the market. So for this last section of the show, let's just talk about which alts I'm focusing on for Feb. So if the market does start to turn green and we start to validate some entries, what are the sorts of altcoins that are high up on my watch list? Well, the first sector of coins are the utility coins. Utility, RWA, DeFi, in terms of relative strength on centralized exchanges, these have been the strongest performers over the past week or so. Assets like Solana, this is consolidating nicely on the weekly below all-time highs. These are assets to watch. Jupiter, as a beta play, I think their burn announcement and their new tokenomics is super positive for the protocol longer term, but obviously the market's been weak, so it retraced some of its announcement, although it has flipped on the daily money noodle here. This could be looking like an entry, and then obviously you've got your wick low here and your moving average as well to potentially operate as invalidations for that if you want to open a trade there. But I'm not advocating for you to open a long on Jupiter right now. I'm just saying these are the types of coins that will perform well if the market does pick up in February. So I've got my eye on those two. Obviously, Hyperliquid is another one I've got my eye on. Their user growth and cumulative trade growth has been mind-blowing. And it's a real example of a product in recent times that has gained product market fit in crypto. And from a technical perspective, it has had a few days now of closing, or at least being above this range high zone. It's also holding above the MA as well. So from a fundamental perspective, Hyperliquid looks really strong, which I do like. There are a couple other utility projects. As I said, utility is where I think the mindshare lies right now that I'm currently looking at. One of them is Move. I'm watching this one very closely because World Liberty Finance, which is Trump's project basically, purchased 2.4 million Move in 4 transactions. That was prior to them announcing their new mainnet. So there are some catalysts here. I do think a lot of the coins that the Trump family is connected to have very easy narratives, especially the ones on centralized exchanges, that when the market moves, these can pump. So things like Move, Ondo, ENA, these are very clear beneficiaries of the current market. And this is one that if I'm lucky enough to get a lower entry here at 6.4, I think that would be potentially a great zone to accumulate. If not, once the market starts to pick up, this is one that I'm very interested in trading, as in a trending market, I could see this trending to the upside. So this is one that I'm definitely watching in terms of utility. And then, of course, the RWA coins. I've spoken a lot about them, but it would be remiss of me not to mention them in terms of alts that could do well in February, RWA is the strongest performing narrative right now. Look at the 7-day performance of Mantra, up 50%. Chainlink only down 1.2. Even assets like Quant only down 0.5. Pendle only down 1.2. Chex is up 8.4%. So a lot of these assets are flat or up, despite the overall market being much more down than that. If you do go on to CoinGecko and look at the general market, Bitcoin's down 2.6, Ethereum down 2.3, Solana down 9.9, and you have some really big losers. Some of the AI coins down 20 to 30%. By the way, I think WorldCoin at some point could be a DCA. Jordy's really bullish on WorldCoin. So fundamentally it makes sense, but let's have a look and see if the technicals look good for a buy. I'm doing this live on the stream, so you'll get a little bit of well, these aren't streams anymore. I used to do streams or banter of how I would look at a coin technically. So you've got this level. This is your key support level. You can draw it, in many different ways, but it's around here. You have your previous low, which is your wick low here on the 2nd of November. I like to draw them with my dotted lines. So you kind of have 2 bid zones in my opinion, or 3. You could bid here and be willing to cut super quick on a close below. That's at $1.55. Then you have your $1.20 zone. This would be a great, if we do, I don't think we will get there, but if we do get to this major support at minus 30%, that would be a great bid zone in my opinion. And then you have option 3, which I think makes sense for a lot of you in the market right now. And that's just waiting for a trending market. Wait for the uptrend to establish. Don't even play the guessing game and catch knives, and just get in on the retraces and on confirmation. I think a lot of people would do well waiting for confirmation. It's the same with memes, by the way. I'll show you the Mu chart, which fundamentally is one of the memes that I like the most in the market, but this chart doesn't look very good. However, the second it starts waking up, you can look to start playing the technicals on that initial support resistance reclaim and then that initial flip of the moving average. If it started to work its way out like this, that could be a setup that presents itself. So if memes do come back, you don't actually need to average into them super heavy right now in case they come back and catch a falling knife. You can actually just wait for some strength and then get in on the confirmation. There's not really any need to overcomplicate that game. And if you're getting in on confirmation, by nature of that, you're going to have stricter invals, which make it easier and to trade, and you have less downside on those trades. But yeah, clearly RWA is a narrative that I think is super strong and showing relative strength versus the market, where a lot of coins are down 15 to 20% this week. You can see that social mentions for tokenization have actually 5x since the beginning of January. So it's clear it's RWA season. Even if you look at Chex, like I've showed you a bunch of altcoins today. Most of them look terrible. An asset like Chex looks brilliant from a technical perspective. And this asset's no different. If this starts to break down, I think the first level that you've got to have as potential inval is 44. And then also the noodle as well, which is around 40 cents. These would be the levels I might de-risk at if it broke down and then look to target this wick low here at 28 to 30 cents. So even with an asset I'm super bullish on, I'll have partial inval. Now, this is actually a good example of an asset. Okay, I'm holding Chex long-term. I believe in it long-term. But a percentage of my bag, so let's say 50% of my position is locked away for the longer term because I have conviction. But 50% of my position is playing off the technicals, and I'm happy to let it be invalidated and cut and re-enter based on technicals. So you can actually, even of positions that you're really bullish on, split them up and have a partial invalidation. So you don't need to be reliant on, oh, it's a long-term play, I'm not doing anything. You can still pay attention to the technicals. The percentage that you put in the active managed category versus the blind holding category of one specific altcoin holding will depend on your time horizon and conviction in that coin. So if you have a lot of conviction, and this is very rare, there's probably only a few coins in the market that you'll do this for, but if you have a lot of conviction, you may just choose to hold it out and not have an inval. Your inval could be like the 50% level on the weekly time frame. Anything else, even if you have conviction in it, have a percentage that you're willing to just risk manage a little bit. So yeah, that's pretty much my overview for my strategy heading into February. Hopefully you found this video valuable. I will see you in tomorrow's video where I'm doing a Q&A. So if you have any questions that you'd like me to answer in tomorrow's video, put them in the comments below, and I'm going to answer a bunch of questions tomorrow. If you're in the Discord, of course, I'm answering questions every single day in real time, so you'll get an answer a bit sooner. And I will see you in tomorrow's video. Hope you have a lovely rest of your day. Peace out.